Alright guys, welcome back to the channel. I thought I'd start a new series and see if it takes off in YouTube. I'm titling it something like Ambiguous Thoughts. We're always getting thoughts on questions, whether it's in the YouTube comments or on Instagram or on X, around what my thoughts are on the markets. And I'm going to cover Bitcoin and of course stock markets as well, as it all is part of the same cycle with the liquidity in the market and just where that liquidity is going. But if you like the idea of it, and I'll try to keep the titles roughly the same, then let me know. Hit the like button if you prefer this type of content, if you prefer the type of title, more importantly, because I think it just encapsulates what we're trying to do here. We're having a look at the markets day by day using technical analysis, using cycle analysis, and then essentially we're, well, analyzing it and giving our thoughts on. And there's no right answer. It's just a theory, you know, like a base case that we follow until proven otherwise. And so that's what I want to present today, looking at the bullish case, the bearish case, and the neutral case until we see further confirmation. I'm going to focus mostly on Bitcoin and of course, well, mostly Bitcoin and Ethereum, but I'll cover gold and the stock markets as I think they all play a part here with where the liquidity is going in the financial markets. So there's a couple of simple things that we've tracked previously in old cycles, well, the previous cycle, and some similarities that are playing out in this cycle. So if the video is helpful, let me know and hit the like button down below. Of course, you can subscribe and see where this journey takes us all. So I'm going to start out with Bitcoin here. And what we've been tracking through this entire cycle, in case you've missed it, is this low forming, which was the bottom of the current cycle. And the main, well, a couple of main things here that we were tracking was the Wyckoff accumulation. I posted about this. That was the base case at the time. Now, I wasn't trying to catch the exact low because there was no way in hell that anyone is going to know that FTX is going to collapse and that's going to cause the low for 2022. But we were tracking it from this period in June 2022 that basically was the, well, very close to the low price. Now, it wasn't the low in time, but it was a low in price. And I think that's really important as we get to this period now with Bitcoin hitting the 126K. Because June came in, that was around $17,000, $18,000. It stayed there for a few months. FTX happened. Then you had about 6 weeks down and then it pumped back up. So that was the first thing, the accumulation of Bitcoin at the lows, the extreme fear, and then there was a divergence in the fear. The divergence was basically you had the less fear happening through that stage of the market, and you started to see the price hold steady. It dipped a little here and then came roaring back, and then you end up with greed. So there was a divergence between the price going down, yet the fear was going up. And something we see now is the greed going down, but the prices have continued to put in higher highs. So we're getting the opposite divergence in a long time frame as well. So that's not necessarily a great thing for the bull market long term, but it doesn't mean that the cycle is over. We can always print another top. How strong that top is going to be, will be, of course, depends on where this low comes in and then the subsequent rally. So I'll get to that in a moment. But that's one of the first things that we're seeing in regards to Bitcoin, higher prices, yet we're seeing lower expectations here of the sentiment. There's just not as much greed that we have seen since the first massive breakout in February, March that got us to the first all-time high, the second all-time high, the third all-time high, the fourth all-time high, and then we start to get a little bit granular here with the August and October all-time highs. They were all essentially lower on the sentiment. So accumulation, got it. That was the Wyckoff schematic that we covered at the time. Then we had the sentiment, cool, that was telling us that things were turning around and we just had to be patient. We just had to wait for this. And then one of the major third things we saw was the overbalance in time and price. So an overbalance essentially looked at more buyers coming in. It was a bit of a subtle sign at the time. There was more buyers stepping in than what we had seen previously on each of the rallies in the bear market. So they're holding up the price. They're doing it for a longer period of time, basically buying for a longer period of time. That's telling us that we're getting to that point. Now, that's something that we haven't seen yet. So that's a positive on the bull case. right? So we haven't got that. We haven't got any overbalances in time and price on the downside here for the breakdown. And for those two areas, we're watching these here. We're watching the time and price for the March to August collapse, and then the time and price from the January to April collapse. So if we start to see this extend here, it extends further in time than this one and further in price than the 2025 price. Well, then the market is telling you that there is far more selling happening than buying. It's pretty straightforward. Those prices there, you're looking at about $35,000 to the downside, and the longest correction we've seen in this bull market is 21 weeks. We know it's 144 days to be precise. So that essentially takes us out to 35K down is about $91,000, and that 140 odd days takes you out to about late Feb. Okay, so we've got a time and a price target on the map. So if Bitcoin does head down, before that time, but not as low as that price is 91, then there is still a chance of the bull market recovering. How far does that go to the upside? I think will depend on how far down it breaks. You start to see bigger corrections, it's going to need a lot more to carry it past the highs. I think Ethereum is a good example of that, because we've seen the prices run up. You can see it to 4,000, 4,100. There was a huge correction. And then this rally was very strong, $3,600 to the upside, but it didn't really go that much higher than these tops. At 41, it ran for a day to 4,900. So, $800, okay, 20%, but it barely took out the previous all-time high. And this is now over 3 years. Yeah, there it is. Over 3 years into the bull market. Low to the high for Ethereum was 166 weeks to get to roughly a few bucks over the previous all-time high. So the ambiguous hypothesizing here for Ethereum, on the one hand, we could say that we're getting very close to the top. If not, this has already been the top, okay? But we haven't seen a breakdown yet of the major support levels, including the 61%, and I'll show you that for Ethereum in a sec. And on top of that, the overbalance in time and price hasn't broken either. So that were the two things there I was looking at. We haven't seen the breakdown with the time and the price, and we haven't broken key structure yet on the macro basis. Now, in regards to Bitcoin, we have a time and a price target here for BTC. What we've seen twice before, now this is, I hate to say it, I'm trying to find more bullish signs here for the sake of, I guess, the hopium. But the more we look, the more we can see the pullbacks here. But I think there is some silver lining overall. Okay, and I'll get to that in a moment. The pullbacks here, $36,000, took roughly around 10 weeks, 70 days. Check out the next pullback, top to bottom, bam, $36,000, 11 weeks, almost identical to that one there. The problem with the rally was that it was a very poor rally. It was a lot of excitement in it. It ran into a lower high on the back of the Bitcoin, whatever it is, Miami conference that was happening in the US at the time. Lots of excitement. And then basically things tanked from that point. So you had an equal correction to these lows. You had some breakdowns of important swings at this time as well. A very crappy failed rally, and which then eventually failed. And then you had this big collapse from the point. So I'll get to the hopium part of all of this now. And although we haven't seen those breakdowns, if we do happen to get to this 91K around February of 2026, that would be an overbalance in time and price, yes, which means it is far more likely that the rally is going to be a lower high form. Okay, but, and this is where the hopium comes in, maybe this isn't going to be the same sort of collapses like we saw last time, because we haven't seen the big pumps at the end of the cycle. We saw them earlier on. And if price is going to come back and fill in these extreme greed points like we saw in February to March, that's what this square rectangle is here. That's February, that's March. We had extreme greed, There you can see it. And we had extreme greed here, but we haven't had it here. And it comes back to fill in that sentiment, then the corrections may be a lot less than the prior cycles. So just to fill in all the way down to the lower of the first week of November, which was the election week, roughly 47%, and then all the way down to this first week of February, it's about 66%. So a lot less than prior cycles, but it's still a significant correction. So where I'm going with that is anywhere in between that could be a case where Bitcoin just goes quiet, bounces around, trades between specific ranges, maybe 60 to 90-ish thousand. If it breaks down again, then you've got a little bit down here between 42-ish and 56. So there's that range there as well. Maybe it breaks down into one of these ranges and essentially goes quiet into a trading range like what has happened before, but you don't get this huge collapse. So in that case, yes, bears could be right and say, yeah, the top's in, that's it, that's the cycle over. But I suspect that they're going to be looking for much, much lower prices. And again, they'll be the same idiot bears like they were in the last cycle. You know, the people that were there, they were calling for $10,000 Bitcoin, $9,000 Bitcoin. If you weren't around then, you just have to search them. Someone will tell you in the comment section who those people were. And although they would call in bear the entire bull market, they also called bear in that bear market, but they got greedy. They got greedy on their calls and kept getting lower and having lower and lower expectations of that. And that might catch them out again here if that, if we do get that. And the reason why, before I get to how we could base there and then rally up, the reason why for these times of, I guess, quiet and down, not as much interest in Bitcoin and crypto, we can see a few of them here with the Google Trends. Crypto and Bitcoin search volume for the last 12 months is hitting record lows for the last 12 months, that is. Crypto's at 13. It's been 13 once before in June, July of this year, before things bounced. Okay, so that's important to note as well. 13. It's basically been down here before, and it's right at those lows at the moment. Bitcoin also at 34, right at these lows. And over the last 5 years, it's basically continuing down from this point. You can see it's just small bounces last week, and this week we're on our way down again. Crypto at 9, Bitcoin at 22. Crypto was at 8 back in July. It was at 8 in October 24. It was at 6 October 23. So this is the period where it really has a lag in interest. The other thing we're seeing is the exchange volume has also just turned the corner here. It started to head down again at 64 billion today after hitting a peak there at 67. Ideally, this holds up for the bulls and we start to rise higher. That would then break the top and you get higher highs for the exchange volume. So more of that liquidity, more interest, more speculation, and so on. But if this continues to roll over, then I think we go with my ambiguous hypothesizing here that the market could go quiet. So that's basically like the neutral case where things go quiet. The bulls don't win because there's no new all-time high. The bears don't win because you don't see a mega collapse like in prior cycles. And everyone just pisses off, really. They just get sick of crypto. They stop talking about it. The old I'm tired boss comments come out. People dump what they've got. They forget about altcoins. They forget about everything and they take off. And from that point, it can take a little while to consolidate again before things start to run. We've seen it before in this cycle, well, the current cycle. This took ages. That was June 22 until things started to run, which was late 23. So over a year. And then the prior cycle, you get the idea. There is a lot of time necessary to accumulate again and get things to run. And that could lead us into sometime 2026 before things are ready to run again. So I've gone through these two here, which is how that could happen if we're on that journey right now with the interest dying off according to the crypto data. Now, if it is able to come back, it's got to be within the next, where are we at? End of 25. I think it's got to be before middle of 27. So it's about 18 months. We'll have time for the market to die off and then another quick rally to highs and then things die off for a multi-year bear market. That then is my, I guess, let's go from a neutral to bullish scenario. And if things are heading up like that, well, this would still be part of the everything bubble. We've still seen higher prices for the stock market, which can lead the markets higher. I've pointed out many times before that the stock market can continue running up while Bitcoin goes quiet. So all of these ideas about more and more liquidity coming into Bitcoin and cryptocurrencies, or at least into the financial markets, doesn't necessarily mean that it's going to find its way through to Bitcoin and crypto yet. So just to sprinkle that hopium in the markets, things can go quiet, and at the moment, the indicators would suggest, the charts that we've been following suggest that things are going quiet. Yes, we might see a day or two up like we saw 2-3 days ago, but then of course yesterday came and it hit 107.5, got rejected and came back down. So we may see this thing run up. Ideally, that's what the bulls want to see. We get one last final push and then it's all over from that point. But remember, this has to get above 113 to begin. Reason being, it's the 50% level. There it is, 112,600. So a nice round number, call it 113, and ideally above those double tops there at about 116. Anything below where this liquidation bar was is potentially a lower high rally forming, but we'll cross those bridges if Bitcoin is able to, firstly, and as close as possible we have now, get above $108,000. That's the two tops here, just under it. We know 108 was this low here, slightly higher low here, and when you take a look back, 108 has been a very key level across the board. Look at those lows there, supporting and resisting the market through the last 6 months. So 108, very close to the market now, about $5,000 off. Let's see if it can do that and continue to go, because right now Bitcoin is neutral. As I pointed out in yesterday's video, we get a little more bullish up here, much more bullish up here, but essentially above those areas, bullish at the moment, in neutral, below here. We've got to start looking a little bit more on the bearish side. So I've talked about the everything bubble and how the stock market can continue running higher, yet the liquidity doesn't necessarily find its way into Bitcoin or cryptos, which has happened many times before. Red line, that is your S&P 500, and you can see bear market for Bitcoin. Massive bear market, that's 85%. It's on a log chart, remember? So that's a big, big bear market. Meanwhile, S&P 500 continues to rally, a few corrections, and then they all start to rally again. Bear market for Bitcoin, 2018, massive, 80-something%. S&P 500, top, after Bitcoin's top again, big correction, starts running again, another top, 2019, another top, 2019, another top, all-time high that is, 2019, 2020, COVID happens. Okay, so Bitcoin was on its rally, then COVID happened. Then they all start running together yet again. In the midst of this, we're obviously seeing the home builders start to come down, and that generally signals we're getting very close to the end of the market. We've seen a lower high here on the white line. So that's this one here, top and the top there. And gold has also continued to run, yet Bitcoin has continued to fall. So unfortunately, or fortunately, depending how you look at it, everywhere we're looking, we're still seeing the market sucking liquidity into itself, whether it's gold, precious metals like silver, broke past its 50%. That was a good little rally we saw in the last 24 hours. You got that $51. Gold's also been running higher in the white line here. Bitcoin has continued to fall at this point. It hasn't broken its 98K level, so we're still got some hope there. We haven't seen the breakdowns. The overbalance hasn't happened, as I said, in neutral, but we're seeing these other markets reach new all-time highs. Stock market ran up again. I'll talk about the 5-year cycle in the future videos. Dow Jones, new all-time high closing price in history, new highest closing price in history. And where else is the liquidity going? Well, NASDAQ has also had a couple of days of positive movements here, and the AI bubble, of course. So although we're seeing pullbacks in AI and then bounces and so on, you're still seeing the majority of the money getting sucked into stock market. So I think unless that changes, then it's possible that we're going to see more of the same like that through this stage of the cycle. And one, hopefully, for the bulls anyway, This 98 holds, and we see some of that liquidity come back into Bitcoin, but probably not as much as what's happening in the stock markets or in precious metals, as I've pointed out with these charts here. Bitcoin against the S&P 500. You can see it's been on a downwards trajectory since July. And so that has been the theory here, that while Bitcoin hasn't broken those lows yet, the liquidity is not going into Bitcoin like it once was. And all these charts show where the liquidity has been going. It's just a mathematical equation. Bitcoin divided by the S&P 500, and you can see Bitcoin is now buying less S&P 500 than it once did. And when that starts to happen, you end up with a decline and more money going into the S&P 500. Same thing for the NASDAQ. You've got the tops form, and it's begun to break down here. It's back below previous tops as well, testing previous lows, like what happened in last cycle. When it starts to turn down, then you typically have to start looking elsewhere. Gold and silver have been the strongest here. You can see the lows are the high. You can see the lower highs begun a lot earlier, which means more of that liquidity was finding its way to precious metals earlier than what it was with the S&P 500 for this cycle, whereas last cycle, stock markets were stronger than precious metals. So we're beginning to see what's the top tier, precious metals. Even if they do correct, we're looking broadly here. The second tier is essentially the stock markets, in particular the NASDAQ. And then the third tier, well, if we can call it that, if we're only looking at those three, is Bitcoin. So that's what these charts are showing here. And with this chart, Bitcoin versus gold, it's on the verge of breaking down from all of these lows here at about 24 ounces. So one Bitcoin buying 24 ounces, whereas before it was buying 30, 36 ounces, 39, 40 ounces at the highs. And for silver, it's broken the 50% again and is on the verge of breaking down from 2,000 ounces. So one Bitcoin buying 2,000 ounces. At the peaks, it was buying 3,400 ounces of silver. So if we can identify these things early or midway through, I think you're still going to have a good opportunity for this cycle. So whether we're coming into this peak and rolling over and metals are going to be stronger, I think you've still got a chance there because we haven't seen it break down to the same lows like last cycle. Now, during these breakdown periods, you still had a few months of the market deciding where they wanted to put their money, and it's the same sort of thing here. Look at the bounce, the correction back to the lows, another bounce, correction to the lows. We're seeing the low form, we see a correction, a rally, then the correction back to the lows. Are we going to see that again and then eventually fade out? Very similar to what's happened in the last cycle. You can see the tops coming in, lower lows and lower highs along that journey to that first low. Same sort of thing happened here. Look at this. It comes into the price zone of the accumulation before the last move higher. Right here, it came into the price zone of the accumulation before the last move higher. If it sounded like I just repeated myself, I did, because the same thing happened in 2021. Then this occurred, and then the market broke down from that point. So if things are tracking like they were last cycle, very similarly, we could be in store for something very similar like that. Even if that's the case, there is still a chance for BTC, provided it holds 98K, to continue to run to the upside, but possibly with less enthusiasm than what we've seen in prior moves for this particular move higher. So that's what I've discussed here for the immediate term for this sort of move like that. If we get the breakdowns, then we go back to the case that I was talking about, where maybe things die out here. They test a couple of these greedy zones and then start to work their way higher for a final run a little later in 2026. Maybe by chance it gets there in early 27. I'm not sort of holding my hopes to that at all. But if we did have some time in 2026, say mid 2026, like a low around middle of the year, Q3 perhaps, that July, August area, we've seen those sort of lows before. We had the August top, we had an August low here, but this was a big August low in 2024. We had a September low, we had an October low, we had this period here, August into September, so another very strong low. then that's 2026, right? Then we may see that run for the end of 2026. That's just an absolute hopium case if we start to see this thing die off, but it doesn't absolutely collapse to the low prices like it has done in the past. Now, there's one other chart that we keep watching, and that is the USDT dominance. Ideally, this thing goes down. That's been my theory the entire time. The base case is down is good for the bull market, up is not great for the bull market, basically brings on a bear market. So this would also need to get rejected at these highs. It needs to get rejected anytime now so that it can reverse here and basically all that liquidity come straight back out from stablecoins and into Bitcoin, and then of course over into Ethereum and other cryptocurrencies. If you have made it this far, let me know. Hit the like button. If you've enjoyed this sort of video, great. Comments are always welcome down below. We're not finished yet, but I thought I'd just remind us all that there is the Black Friday sale coming up. If you are on the email list, you will get notified about that. Plus, you'll also get the free reports that are coming out Tuesday, Wednesday, and Thursday. So USDT, USDC, they are continuing higher. They need to get rejected at these levels, around 8.2% and 9% for the combination of them. Coming back down, that's going to be good for the markets. Now, the corrections have been very similar for Ethereum as well. And as you can see, for price cycle, we're looking at these levels, top to bottom, $2,700, top to bottom, $2,700, failed rally to the upside, and then it came down. So right now for Ethereum, this needs to hold out here so that it does not extend the correction. Look at the correction so far. Call it $2,000, a couple of bucks off $2,000. This correction is at $1,900. It's just $100 difference. If this comes down to $2,900, then it's going to have an equal correction here like it did in 2024. It did have a rally and then another big correction. Very similar to this, except this rally ran higher. On most exchanges, it just pipped the top and then had a bigger correction. This rally obviously was weaker and then had a bigger correction. And in this case, maybe we do come down, have a rally or a weaker rally, and then correct. So there's still a lot of things pointing to that's what's going to happen. So in terms of the rally, we definitely need to see things hold on, especially above these key support levels. And the rally has to break the resistance levels. It's got to get above those. Ethereum has got to get above $4,200 for Bitcoin. I've talked about 113K, that being the first target, or 108 for the very short term because that's where we just got rejected, but 113 because that's the 50%. Ideally, it's above roughly around 120. See all the previous opens and closes. The market has only done one weekly close above the 120K level. So we need to see multiple weeks above that. Otherwise, I think we start to run into a weaker, lower high, get everyone excited, get all the bulls back in town, thinking that, the bears are wrong, we're going for it. Hopefully this is what happens and it squeezes out all of those shorts. That's just a bit of an ego thing there, squeezing out the likes of all the perma bears, the capos and the wins and those verified so-called traders, squeezes them, and then things start to head south just to keep them out of positions. But anyway, that's an ego thing. I'll leave it there for the ambiguous hypothesizing with my thoughts on Bitcoin and Ethereum at this stage. Comments down below. Otherwise, like and subscribe, and I'll see you guys back at the next video.